Based on the historical data and forecast, Bitcoin shows a downtrend with fluctuating volatility. The RSI consistently hovers below 50, indicating a weakening momentum. Considering the support price of 87,400 and the forecast for further decline, I recommend a short-term short position. Entry price should be $86,900, with a stop-loss set at $87,600 to mitigate potential losses if the price rebounds. The initial target price is $86,300, aiming to capitalize on the anticipated downward trend. To refine this strategy, I'll incorporate the Bollinger Bands. The price is currently trading near the lower band, suggesting a potential bounce. However, given the overall bearish sentiment, I'll maintain the short position. If the price touches the lower Bollinger Band around $84,900, consider adjusting the target price to $84,600 for enhanced returns. This combined strategy leverages both RSI and Bollinger Bands for a more robust and adaptive approach to the market. Based on the historical data and forecast, Ethereum shows a downtrend with support at $2,830. The RSI consistently hovers around the 40s, indicating a neutral to slightly bearish sentiment. The Bollinger Bands show that the price has been approaching the lower band, suggesting potential for a short-term bounce. Considering these factors, I recommend a strategy that combines RSI and Bollinger Bands. We will enter a long position when the RSI reaches an oversold level below $37 and the price touches the lower Bollinger Band. The entry price will be $2,860. The stop-loss will be set just below the support level at $2,820. The initial target price will be the center of the Bollinger Bands at $2,890. To maximize returns, we will implement a trailing stop-loss strategy. As the price moves up towards $2,890, we will adjust the stop-loss to $2,860. If the price reaches the target of $2,890, we will take partial profits and move the stop-loss to the entry price of $2,860. If the price continues to rise, we will adjust the stop-loss further to maintain profitability. If the price falls below $2,820, the trade will be closed with a small loss. This portfolio combines the RSI and Bollinger Band strategies to take advantage of short-term bounces while managing risk effectively. Based on the historical data and forecast, BNB shows a downtrend with support at $844. The RSI consistently remains below 50, often dipping into oversold territory below 40, suggesting potential buying opportunities. The Bollinger Bands indicate periods of volatility, with the price occasionally touching the lower band, further reinforcing the oversold condition. Considering these factors, I propose a strategy focused on capitalizing on short-term bounces after oversold conditions. Specifically, I recommend entering a long position when the RSI falls below 38, for example, at $833 plus $10, setting a stop-loss slightly below the support level at $827 plus $5, and targeting a profit near the center of the Bollinger Bands, around $841 plus $10. To refine this strategy, we will incorporate a portfolio approach. Given the recent downtrend and forecast, I suggest a 60-40 split between the long strategy and a conservative hedging position. For the long strategy, when the RSI dips below 37, enter a long position at $833 plus $5, with a stop-loss at $827 plus $10 and a target of $845 plus $5. Simultaneously, initiate a short position at $854 plus $5, with a stop-loss at $860 plus $5 and a target at $844 plus $5. This dual approach allows us to profit from potential bounces while mitigating downside risk, maximizing overall returns in a volatile market. Based on the historical data and forecast, XRP has shown a downtrend, with the price consistently testing the lower end of the Bollinger Bands and RSI values hovering below 50, indicating weakening momentum. The forecast for the next week predicts continued decline, further reinforcing a bearish outlook. Given this trend, I recommend a short selling strategy. We will enter a short position at $1.83, placing a stop-loss order at $1.86 to protect against unexpected upward movements. The initial target price will be $1.79, aligning with the forecast and a lower Bollinger Band. To refine this strategy, we'll incorporate RSI signals. If the RSI rises above 50, indicating a potential reversal, we will adjust the target price to $1.75 and consider covering the short position. Conversely, if the price touches the support level of $1.47, we will exit the position regardless of the RSI, securing a profit. This combined approach, leveraging both trend analysis and momentum indicators, aims to maximize returns while minimizing risk in this volatile market. Based on the historical data and forecast, Solana has shown a downtrend with decreasing prices, particularly evident in the forecast period. The RSI consistently stays below 50, indicating a bearish sentiment. The price has been testing the support level of $117 for several days, and the forecast suggests it will continue to decline, potentially reaching $118. The Bollinger Bands also reflect this downward trend, with the lower band consistently near the current price. Therefore, I recommend a short selling strategy. We will enter a short position at $121, setting a stop loss at $126 to limit potential losses if the price unexpectedly reverses. The initial target price will be $118, aiming to capitalize on the predicted downward movement. To refine the strategy, we'll incorporate the RSI and Bollinger Bands. If the RSI reaches below 35, indicating an oversold condition, we can consider covering part of our position at $123 to secure profits. Conversely, if the price touches the bottom of the Bollinger Bands, which is around $119, it suggests a potential bounce, and we can adjust our target price to $120. If the price breaks above the resistance level of $126, we will immediately close the position to prevent further losses. This dynamic approach, combining trend analysis, technical indicators, and support/resistance levels, aims to maximize returns while managing risk effectively. Based on the historical data and forecast, TRON shows a slight upward trend, but the forecast indicates a potential pullback in the coming days. The RSI is fluctuating around the midpoint, occasionally dipping into oversold territory but not consistently. The Bollinger Bands are relatively stable, with the price generally trading within their range. Considering these factors, I propose a moderately bullish strategy with a focus on capitalizing on short-term bounces. My strategy involves a buy entry at $0.276, coinciding with the forecast price on December 31, 2025. Given the support level at $0.274, I'll set a stop loss at $0.273 to limit potential losses. The resistance level at $0.288 will serve as the initial target price, aiming for a gain of $0.012. However, if the price breaks above $0.288, I'll adjust the target price to $0.29, anticipating further upward movement. This strategy combines RSI and Bollinger Band signals with support and resistance levels to maximize potential returns while managing risk. Based on the historical data and forecast, Dogecoin shows a downtrend with increased volatility. The RSI consistently hovers between 31.7 and 42.0, indicating a mixed sentiment but generally leaning towards oversold territory. The Bollinger Bands are widening, suggesting increased price fluctuations and potential for breakouts. The support price is consistently at 0.122, while the resistance fluctuates around 0.132. Considering these factors, I recommend a contrarian strategy focusing on potential rebounds from the support level. My strategy involves a long position with an entry price of $0.124+. The stop loss should be set just below the support level at $0.122+ to mitigate potential losses if the downtrend continues. The initial target price is set at the resistance level of $0.132+, aiming to capitalize on a potential bounce. If the price breaks through the resistance, a trailing stop loss can be implemented to secure profits and adapt to further upward movement. This strategy combines RSI oversold signals, Bollinger Bands volatility, and support/resistance levels for a balanced approach to maximize potential returns while managing risk. Based on the historical data and forecast, Cardano is exhibiting a downtrend, with consistent lower highs and lower lows. The RSI consistently remains below 50, indicating a bearish sentiment, with dips into oversold territory below 37. The forecast data suggests a continuation of this downtrend, with prices predicted to fall further. Considering the support level at $0.326 and the forecast, I recommend a short selling strategy. Enter a short position at $0.363, setting a stop loss at $0.375 to protect against a potential reversal. The initial target price is $0.334, aligning with the forecast and the lower Bollinger Band. To optimize returns, implement a trailing stop-loss strategy. If the price rises above $0.375, adjust the stop-loss to $0.363. If the price reaches $0.334, move the stop-loss to the entry price of $0.363 and set a new target price at $0.329, based on the forecast. This approach allows us to capitalize on potential upward fluctuations while securing profits and limiting losses. This portfolio combines the RSI oversold signal, the downward trend, and the Bollinger Band's prediction for maximum efficiency. Based on the historical data and forecast, Bitcoin Cash shows a volatile trend with periods of consolidation and upward movement. The support price consistently remains at $536, while the resistance fluctuates around $598. The RSI indicator fluctuates between 45.8 and 63.5, indicating periods of oversold and overbought conditions. The Bollinger Bands show price volatility, with the bands widening and narrowing. Considering these factors, I propose a combined strategy leveraging RSI and Bollinger Bands for optimal returns. My strategy involves a layered approach. First, I will initiate a long position at $576, coinciding with the first forecast price and a slight dip from the recent high. The initial stop loss will be set at $567, just below the forecast low and the recent low. The first target price will be $586, aligning with the forecast high. If the price reaches $586, I will move the stop loss to $572, securing some profit. Subsequently, I will set a second target price at $593, near the recent high. If the price fails to reach $586 and drops to $567, the trade will be closed with a loss. This layered approach allows for profit-taking and risk management throughout the trade. The RSI readings suggest that the asset is approaching oversold conditions, which may lead to a potential upward reversal. The Bollinger Bands indicate that the price is currently within a normal range, suggesting continued volatility. Based on the historical data and forecast, Wrapped Beacon ETH has shown a downtrend from December 11, 2025, to December 24, 2025, with the price fluctuating between a support of $3,070 and a resistance of $3,260. The RSI consistently remained below 80, indicating no overbought conditions, but dipped below 40 on several days, signaling potential oversold scenarios. The Bollinger Bands have been narrowing, suggesting decreasing volatility, and the forecast for the next week projects a continued downward trend, with prices ranging from $31.60 to $31.10. Considering these factors, I recommend a contrarian strategy focusing on potential short-term bounces within the downtrend. My strategy combines RSI, Bollinger Bands, and support/resistance levels. I will initiate a long position when the RSI dips below 40, specifically at $3,110, anticipating a short-term bounce. The stop loss will be set just below the support level at $3,050 to protect against further downside. The target price will be set at the nearest resistance level, $3,160. If the price fails to reach the target and instead breaks below the support level, I will immediately close the position. This strategy aims to capitalize on temporary pullbacks while acknowledging the overall downtrend, maximizing potential returns while minimizing risk. Based on the historical data and forecast, PancakeSwap has been in a downtrend, consistently testing the support price of $1.8. The RSI has been consistently below 50, with periods below 30, indicating oversold conditions. The Bollinger Bands show a narrowing band, suggesting decreasing volatility, and the price is nearing the lower band. Given the forecast price continuing to decline towards $1.68, a short position is warranted. I recommend entering a short position at $1.84, placing a stop loss at $1.88 to protect against a potential bounce, and setting a target price at $1.68, anticipating the downtrend to continue as forecasted. To refine this strategy, we can incorporate the RSI and Bollinger Band signals. When the RSI dips below 30 and the price touches the lower Bollinger Band, it strengthens the short signal. In this case, the RSI reached 28.3 on December 18 and the price touched $1.88, aligning with the short recommendation. Therefore, the revised strategy is to enter a short position at $1.8, set a stop loss at $1.85, and target $1.68. This adjusted strategy leverages both technical indicators to enhance risk management and potential returns. Based on the historical data and forecast, Bittensor shows a clear downtrend. The price has been consistently falling, with the forecast predicting further declines. The RSI consistently indicates oversold conditions, fluctuating between 28.0 and 47.4, with the majority of the period below 40. The Bollinger Bands also support this downward trend, with the price consistently below the middle band and approaching the lower band. Considering these factors, I recommend a short selling strategy. We will enter a short position at $205, placing a stop loss at $218 to protect against a potential reversal. The initial target price is set at $190, aiming to capitalize on the anticipated downward movement. To refine this strategy, we will incorporate a layered approach. If the price reaches the $190 target, we will move the stop loss to the entry price of $205, securing a risk-free profit. Subsequently, we will set a new target price at $196. This layered strategy allows us to maximize profits while minimizing risk. The combination of the downtrend, oversold RSI, and Bollinger Bands strongly suggests a favorable opportunity for short-selling Bittensor. Based on the historical data and forecast, Jupiter shows a downtrend with significant volatility. The RSI consistently remains below 30, indicating oversold conditions. The Bollinger Bands are contracting, suggesting a period of consolidation before a potential breakout. The forecast for the next week predicts further decline, reinforcing the bearish outlook. My recommended strategy is a short position with a focus on capitalizing on the predicted downward movement. We will enter a short position at $0.181, placing a stop-loss order at $0.185 to protect against unexpected upward price swings. The initial target price will be $0.17, aiming to capture a portion of the anticipated decline. To refine the strategy, we'll incorporate the RSI and Bollinger Band signals. When the RSI dips below 20, it signals a potential bounce, which we'll use to adjust our position. If the RSI reaches 20 while we are short, we will consider covering half of our position at $0.175. If the price touches the lower Bollinger Band, we will consider covering half of our position at $0.176. Conversely, if the price breaks above the upper Bollinger Band, we will exit the entire position at $0.186. This adaptive approach allows us to manage risk and maximize potential returns by dynamically adjusting to market conditions. Based on the historical data and forecast, Starknet is in a downtrend, with the price consistently declining from December 11, 2025, to December 24, 2025. The RSI consistently remains below 50, indicating a weakening momentum. The forecast for the next week projects further decline. Considering the support price of $0.0788, I recommend a short selling strategy. The entry price should be set at $0.0788, coinciding with the support level. To mitigate risk, the stop loss should be placed just above the recent high of $0.0836. The target price should be set at $0.0725, aligning with the forecast price on December 31, 2025. To refine this strategy, I'll incorporate the Bollinger Bands. When the price touches the bottom band of $0.0698, it suggests an oversold condition and a potential bounce. However, given the overall downtrend, I maintain the short position. The RSI is currently around 32.9, which is not oversold yet. Therefore, the portfolio will prioritize the short-selling strategy with an entry price of $0.0788, a stop-loss of $0.0836, and a target price of $0.0725. This approach combines trend analysis, support/resistance levels, and Bollinger Bands to maximize potential returns while managing risk effectively. Based on the historical data and forecast, DoubleZero shows a downtrend with periods of consolidation. The RSI consistently fluctuates between 31.6 and 41.7, indicating neither strong oversold nor overbought conditions. The Bollinger Bands show that the price has been approaching the lower band, suggesting potential for a short-term bounce. Considering these factors, I recommend a moderately bullish strategy. We will initiate a long position at $0.104, placing a stop-loss at $0.102 to protect against further downside. The initial target price will be $0.106, aiming to capture a small upward movement. To refine the strategy, we will incorporate the RSI and Bollinger Band signals. If the RSI rises above 50 and the price touches the upper Bollinger Band, we will adjust the target price to $0.108. Conversely, if the RSI falls below 30 and the price touches the lower Bollinger Band, we will maintain the stop-loss at $0.102 but reduce the target price to $0.105. This adaptive approach allows us to capitalize on both bullish and bearish scenarios while managing risk effectively. This combined strategy offers a balanced approach to potentially high returns. Based on the historical data and forecast, Pudgy Penguins exhibits a downtrend, particularly evident in the recent price action and the downward projection for the next week. The RSI consistently hovers below 50, indicating a weakening momentum. The forecast prices are predicted to continue this decline, further reinforcing the bearish outlook. Considering the support price of $0.00879 and the recent price fluctuations, I recommend a short position strategy. We will enter a short position at $0.00921, placing a stop-loss order at $0.00977, just above the resistance level to limit potential losses if the price unexpectedly reverses. The target price for this trade is set at $0.00865, aligning with the first forecast price. To refine this strategy, we'll incorporate the Bollinger Bands. The price consistently trading near the lower band suggests the asset is undervalued and prone to further decline. The RSI nearing oversold territory, around 35 to 40, indicates a potential bounce, but the overall trend remains bearish. Therefore, the portfolio will be 60% short position based on the trend, 30% RSI strategy, and 10% Bollinger Band strategy. The RSI strategy will look for an oversold signal below 20 to enter a long position, while the Bollinger Band strategy will look for a price touching the lower band to enter a long position. This blended approach aims to capitalize on the prevailing downtrend while mitigating risk and potentially benefiting from short-term reversals. Based on the historical data and forecast, SKY demonstrates an overall upward trend with increasing momentum. The price has consistently tested the support level of $0.06, and the forecast suggests continued price appreciation towards $0.0705. The RSI values are generally above 50, indicating bullish sentiment, and have approached overbought territory on several occasions. The Bollinger Bands show that the price is currently near the upper band, suggesting a potential for a pullback or a continuation of the upward trend if it breaks above the upper band. Considering these factors, I recommend a long position strategy with an entry price of $0.0645. A stop-loss order should be placed slightly below the support level at $0.0595 to protect against a potential downside reversal. The target price for this trade should be set at $0.0695, aligning with the forecast price and providing a reasonable profit margin. To refine this strategy, we can incorporate the RSI and Bollinger Band signals. When the RSI dips below 30, consider accumulating more positions, and when the RSI exceeds 70, take partial profits. If the price breaks above the upper Bollinger Band, it signals a strong bullish momentum, and we can adjust the target price to $0.0705. This combined approach, utilizing trend analysis, support and resistance levels, and technical indicators, should yield high returns while managing risk effectively. Based on the historical data and forecast, basic attention has shown a downtrend from December 11, 2025, to December 24, 2025, with the price fluctuating between $0.207 and $0.278. The RSI has been mostly below 60, indicating weakening momentum, and recently dipped below 45, suggesting an oversold condition. The forecast for the next week projects a continuation of this downward trend, with prices ranging from $0.228 to $0.219. Considering the RSI, we will implement a strategy that aims to capitalize on potential short-term rebounds while mitigating downside risk. We will use a combination of RSI and Bollinger Bands to identify potential entry and exit points. Our strategy will involve a tiered approach. First, when the RSI falls below 40, we will enter a long position at $0.221. The initial stop loss will be set at $0.207, just below the support level. The first target price will be $0.228, near the recent high and the center of the Bollinger Bands. If the price reaches $0.228, we will move the stop loss to the entry price of $0.221 to protect profits. If the price continues to rise and touches the upper Bollinger Band, we will set a second target price at $0.247. If the price fails to reach $0.228 and shows signs of further decline, we will exit the position at $0.219, aligning with the forecast and support level. This strategy combines the oversold signal from RSI with the volatility indicated by the Bollinger Bands to manage risk and maximize potential returns. Based on the historical data and forecast, Zcash has shown significant volatility with a general downtrend from December 11, 2025, to December 24, 2025. The RSI consistently fluctuates around the mid-50s, indicating neither strong overbought nor oversold conditions, but the recent drop to the 40s suggests potential for a rebound. The Bollinger Bands show that the price has been trading within a relatively wide range, and the forecast suggests a continued sideways movement with prices hovering around $400 to $425. Considering the support price of $417 and the forecast, I recommend a long position with an entry price of $404. Place a stop-loss order at $402 to limit potential losses and set a target price of $425 to capitalize on a potential upward movement. To refine this strategy, we can incorporate the RSI indicator. If the RSI drops below 20, indicating an oversold condition, we could consider a long entry. Conversely, if the RSI exceeds 80, suggesting an overbought condition, a short position would be more appropriate. However, given the current trend and forecast, the primary strategy remains a long position with an entry at $404, a stop loss at $402, and a target price of $425. This approach balances the potential for gains with risk management, aligning with a high returns investment strategy. Based on the historical data and forecast, Conflux has been fluctuating within a range, with support around $0.0703 and resistance around $0.0783. The RSI has been oscillating between 34.4 and 52.5, indicating periods of oversold and overbought conditions. The Bollinger Bands have been relatively narrow, suggesting low volatility. Considering the recent upward trend and the forecast prices, I recommend a moderately bullish strategy. We will initiate a long position when the RSI falls below 40 and the price touches the support level of $0.0703. The entry price will be $0.0703. To mitigate risk, set a stop-loss order at $0.0694, just below the forecast price for December 25, 2025. The target price will be $0.0783, aligning with the resistance level. To further refine the strategy, we'll incorporate Bollinger Band signals. If the price touches the lower band, around $0.0667, and the RSI is below 40, it strengthens the buy signal. In this case, the entry price would still be $0.0703, with a stop loss at $0.0694. However, if the price breaks through the upper band, around $0.0773, while the RSI is above 60, it signals a potential reversal. Therefore, the portfolio will be a combination of the RSI and Bollinger Band strategy, prioritizing the RSI signal for entry and using the Bollinger Bands for confirmation and potential exit points. The final portfolio will have an entry price of $0.0703, a stop-loss price of $0.0694, and a target price of $0.0783.